Well, thank you for sticking around here this afternoon. So my name is Garrick. I'm with CoinDesk in the London School of Economics. And we're going to talk today about a little bit about CoinDesk and our State of Bitcoin report, which we just published last month. We'll go through a few highlights from the report, talk about some of the macro and micro drivers for Bitcoin, with an emphasis on China specifically, and then wrap up with some final thoughts about what could really drive Bitcoin's growth. So first, I trust everyone here knows about CoinDesk. It's the leading source for news, guides, data, and analysis on cryptocurrencies. CoinDesk features everything from a beginner's guide to Bitcoin, our Bitcoin for dummies, if you will, to probably the most widely referenced Bitcoin price index. And just last month, we published a 91-page report called the State of Bitcoin 2014, which has already had 80,000 page views. We tried to aim the report at an audience that includes industry professionals like yourselves, as well as media professionals and people who are still relatively new to Bitcoin. And we've been really pleased with the response, the pickup. We've seen a wide media coverage by the Wall Street Journal, CNN, Washington Post, and other tech press. So let's just go through a few of the highlights from the report, which I think you'll find most interesting. So CoinDesk's tagline is the voice of digital currency. But we titled the report The State of Bitcoin because Bitcoin really is the big enchilada, as we've talked about at this conference. 90% of the total altcoin market cap is Bitcoin. And what's interesting is even though the price of Bitcoin has gone down since the beginning of the year, you've actually seen an increase in this market share, this market cap share, if you will, from 80% in December up to 90%. This conference has been very focused on venture capital and startups. I was scrambling this morning to do a little bit of updating with the news that Circle announced a new $17 million round. But we've seen a total of $162 million to date invested in Bitcoin-related companies. Of that figure, about $72 million has come so far in 2014. And if you annualize that $72 million in 2014, we're looking at $300 million invested in Bitcoin companies here this year in 2014. That's a 3x pickup from last year, where we only saw $100 million invested in total. So let's take a look at where that money is being invested. Here you see the story is Europe is really lagging Asia, which in turn is also lagging North America. Close to half of the VC-backed Bitcoin companies are actually based outside of North America. But 75% of the money is actually going to North American Bitcoin companies. By the way, all these slides are available in the free to download State of Bitcoin report on CoinDesk.com's website. So don't worry if you're scribbling furiously or if I'm going too quickly, Mary Meeker style here, they're all for you to download later. So in terms of Silicon Valley's dominance, Silicon Valley has about 30% of the companies, but is getting close to half of the money. So also kind of an outsized proportion of the money is going to the Valley here, to Bitcoin companies. So this is how we see kind of the Bitcoin ecosystem. We see really 6 distinct categories of companies in the ecosystem. And the first 4, payment processors, exchanges, mining hardware, and wallets, I think are pretty well understood. These are kind of the pure play companies in those spaces. The 2 at the bottom, financial services and universal, we should talk about briefly. So financial services are everything from ATM providers to gift cards to white label exchange software. Those are the companies we kind of group into the financial services category. And then universal is a new category, actually, we decided just to create today to really comment on these companies like Coinbase, which are really playing in multiple spaces here. They're really trying to be the universal Bitcoin company, your one-stop shop for your wallet, your payment processing, your exchanges. And if we look at where the money is going to those 6 sectors, it's the universal companies, Circle and Coinbase, which are getting the largest share at 35%. We're seeing the exchanges in second place at 24%. And interestingly, mining hardware, very small percentage, only 8% of the VC money is going to mining companies because of their crowdfunding model, even though there's been upwards of maybe $200 million actually spent on mining hardware so far. The big question, of course, is will the mining producers be able to continue to crowdfund their operations? A lot of people have been disappointed with performance and delays. Maybe the VCs will get more involved in this space, especially given the large revenue that it's attracting. So this table here is, of course, on the mind of any VC who is investing in the Bitcoin space. And it shows the market cap of the traditional financial services sector that could potentially be disrupted by Bitcoin companies. There's the payment processors, the credit card companies like Visa and MasterCard and Western Union, which we all talk about. Visa and MasterCard and other payment processors are about 400 billion of this half a trillion market cap that could be displaced. So they're the largest player for sure. But it's important not to forget the kind of second tier or support companies that also support the traditional financial services firms like bank software companies, like payment hardware companies. That's another 60 billion in market cap. And again, this number is probably on the short side or the small side because this is a primarily North American view. The actual number is probably quite a bit larger if we go out globally. So one of the themes that we discuss in the report is this theme of consolidation. And we're seeing it both in M&A transactions, although there have only been a couple, although I think Brian Armstrong maybe announced one on stage the other day we didn't know about accidentally or intentionally. Satoshi Dice and Zero Block's acquisitions. But we do think there's going to be more consolidation. We think the advent of universal companies like Coinbase is evidence of consolidation in terms of wanting to house more of the Bitcoin value chain under one roof. And we also think we're seeing consolidation in sectors. So this chart here shows the share of trading volume at the non-big three exchanges, so the smaller exchanges. And the left part of the chart is September, October. And you can see smaller exchanges were having days where they're getting 10% or more of the total trades. That's really declined. In the last month, the smaller exchanges, the non-big three exchanges, are getting less than 1% of the market share, with the big three, Bitstamp, BTC, and Bitfinex on the US dollar side really dominating 99% of the market. So this theme of consolidation is something we're already starting to see play out. We all know Bitcoin's incredible price appreciation, possibly the fastest appreciating asset in history, the classic exponential hockey stick chart. But on the merchant side, we're seeing a more linear growth pattern. Using CoinMap data, we know there's only roughly 4,000 physical merchants roughly in existence today, and it's grown quite a bit, 4x in the last 4 months. But I think the really interesting thing about this data is that 85% of physical merchants are based in places like North America and Europe, which arguably are not as in need of Bitcoin as, say, other regions of the world like South America, Asia, Africa, where Bitcoin, I think, makes a much more compelling value proposition. So Bitcoin needs to get into those markets more so than it has proportionally. Okay, so let's talk about some of the macro and micro drivers for Bitcoin. So I wrote a working paper on alternative currencies in general, where I discussed really 7 key forces that are driving the growth in alternative currencies. And prior to the proliferation of cryptocurrencies that we've seen recently, there were already some 4,000 estimated alt currencies like the Brixton pound, which is a local currency in London, in existence. And these currencies have been growing for years for these reasons, I believe. High economic uncertainty, concern about jobs, concerns about the environment, sustainability, concerns about local businesses going out of business, outrage about bankers and their bonuses, technology enabling alternative currencies to be deployed more easily. The Brixton pound now, just in addition to being a physical currency, also you can pay by text, for example, for very low cost. And then inefficiency, these are the transaction fees that Visa and MasterCard charge, which merchants don't like. And financial repression, which is really capital controls in countries like China, which we'll talk more about in a moment, Iceland, Cyprus. These 7 forces are really, I think, what are driving interest in alternative currencies and have done so in the past as well, or many of these have done so in the past. And while this story, I think, has undergone a bit of a transition, there may be a little less outrage towards bankers today. The Eurozone crisis is not on the front burner as much as it was in 2010, 2011. I think this story is still largely intact across the globe, and these forces are still creating a really fertile environment for alternative currencies. So the regulatory story for Bitcoin, this map's a little out of date. One of the problems with trying to do a Bitcoin presentation is, unless you're doing your slides right up to the moment you go on stage, everything can change on you very quickly. But we talk about regulation with Bitcoin, And there's been over 70 countries that have issued some form of regulatory guidance. But to me, the interesting thing is that a very small percentage of those, 12%, can actually be described as, say, hostile or contentious. The vast majority of Bitcoin regulation has been more investigative. We're studying this, we're taking a relatively hands-off approach. So the regulatory picture is not so bad outside of countries like Iceland and others which have taken a more contentious approach. China and India can be described as contentious, Iceland outright hostile. So thinking about kind of the big opportunities for Bitcoin, we know the World Bank estimates that the remittances industry is a $500 billion annual business each year. But if you talk to startups like BitPesa, which is based in Nairobi, and they're doing research on the diaspora in London that sends money back home to Kenya about what's important to them in terms of why they are willing to pay Western Union's 10% fees to send money, you find that things like getting a receipt are really important. Being able to go to a physical location, talk to someone. These things matter to, I think, a lot of people out in the streets who aren't as comfortable with technology as all of us in the room. And so I think the Bitcoin ATM deployment that's taking place right now could be a really important feature in kind of making Bitcoin more physical, more visible, more real for the average person in the street who's thinking about sending money back home to their grandmother. So I'm going to wrap up the macro and micro section with a discussion of the Bitcoin brand. The narrative surrounding Bitcoin's kind of oscillated a bit. A lot of the early story was about black markets and pirates and drugs. We then went to a more positive story and narrative, name brand entrepreneurs like Richard Branson and Overstock and Ben Bernanke saying positive things. And then we've shifted back to, again, some more negative news with, of course, the big story about Mt. Gox. The point here is that I think the brand is really important to Bitcoin, and we shouldn't underestimate the importance of the media in terms of really communicating the message of Bitcoin to wider audience. That's how you're going to get, I think, mainstream adoption, is actually through the media and through the stories they tell. That's going to really help. And just to conclude on the branding discussion here with a somewhat contrarian view, we know that, say, Bitcoin ownership is highly concentrated, or we believe this to be, that roughly 1,000 people hold over half of all Bitcoins. And when Dorian Nakamoto was outed a few weeks ago, a lot of people came out and said, well, the identity of Satoshi Nakamoto doesn't really matter for Bitcoin these days. And from an operational perspective, that certainly would seem true. The dev work's going to continue with or without Satoshi. But his identity could matter, and it could be a positive. We could learn some things about who Satoshi is that make us more interested in Bitcoin and make it more appealing. On the flip side, we could also learn some things maybe that aren't so positive about Satoshi, that may make the general public less interested in enriching this person. So it's a bit of an X factor. I do think this person's identity could still matter, contrary to some of the views that are expressed. So when we think about, at CoinDesk, the places that are really important to Bitcoin's future, China is very near, if not at the top of the list. And there's macro reasons why China could be very important. So this economist over on the right here, Hyman Minsky, I'm sure many of you know his name. He's a bit of the Vincent van Gogh of macroeconomics. He died close to 20 years ago. And like Vincent, his masterwork really wasn't appreciated during his lifetime. It was only really accepted into the mainstream in the last 5 years. He really wonderfully described how a crisis like the 2008 financial crisis could play out, which saw a very large increase in private sector credit, leading to what they call the Minsky moment, which, if you're a fan of the Roadrunner cartoons, this is when the coyote goes off the cliff, keeps running for a while, and then realizes there's nothing out from underneath him and then falls, like we did in September 2008 with Lehman. So Minsky's name is getting mentioned in conjunction with China these days because of pictures like this. There's two lines here. The one that's sloping downward is basically China's trade surplus, which has been declining, and that's how China's been basically fueling a lot of their 7% economic growth. The one that's going up is private sector credit. So we're seeing the official sector and the shadow banking system increasingly driving economic growth through lending that cannot be repaid except for through the issuance of new debt. So debt repaying debt. Morgan Stanley, Nobel Prize winning economists are all looking at this and saying, This looks dangerous. The Chinese authorities may be able to manage it. We don't know. It's a potentially huge macro force that could lead to a lot of Bitcoin adoption in China if we get to a Minsky moment. So moving on to Bitcoin in China, if you go to sites like Bitcoin Charts, Bitcoin Average, wonderful resources, I use them, they'll show you a picture of Bitcoin trading volume in US dollars that shows 80% or more of the trading volume, global trading volume occurring in US dollars. And yuan trading at about 10% roughly, or 17% in the case of Bitcoin Average. Now, it's important to note that trading volume is very tough to independently verify. And there's been a lot of speculation that these numbers are being manipulated, particularly in China. Having said that, we do think that the Chinese numbers are underrepresented. And if you add in OKCoin, which those other charts are excluding, which just received a $10 million investment from some reputable venture capitalists, the picture really changes. You actually see Chinese volume actually picking up quite a bit. I don't know if these are the actual numbers, but I do feel comfortable saying that I think that Chinese volume proportionally is underrepresented. And therefore, for those reasons, for both macro reasons that we just discussed in terms of China's debt situation, as well as the importance of yuan trading to Bitcoin, CoinDesk is pleased to announce today that we've launched a new Bitcoin price index in the yuan. So you can go to the site later today, and in the upper right corner, you'll be able to see the actual price in yuan, not converted using the exchange rate, but actually based on trades in the yuan. And today, we're launching with just two exchanges, BTC China and OKCoin, which have received publicly announced venture capital funding, which we feel is a bit of an independent check on some of the validity behind their numbers. So just to wrap up with some final thoughts, I mentioned the Brixton pound earlier, and thinking about what Bitcoin could do to grow. The Brixton pound is a little local currency right next to where I live in London, taking a very, very different approach to government than Bitcoin has. Local government officials can actually elect to receive a portion of their salary in Brixton pound. You can actually pay, or they're working on this, pay some of your local taxes and fees with Brixton pound in an alternative currency, non-legal tender. I mean, this is huge. Can you imagine Bitcoin doing something similar with government? And I know this would require a bit of a nudge for many in the Bitcoin community to take a more pro-government approach, or kind of embrace government more in the same way of Brixton pound. But I think this could really help further legitimize Bitcoin. And I think the Bitcoin community should think hard about trying to seek out something like what the Brixton pound has done. Since 2008, there's been a lot of people who have been very interested in financial sector reform. There were the people like Thomas Honig, who's the current vice chairman of the FDIC, Simon Johnson, the former IMF chief economist, Elizabeth Warren, who worked on regulatory reform, the Volcker Rule. You saw the Wall Street Occupy movement. These are all people out there who share a lot of similar interests, I think, with the Bitcoin community in terms of wanting to revolutionize and reform the financial services sector. And I think the Bitcoin community could work a little harder on trying to increase the size of the tent, if you will, to bring more of these people in and kind of make them share and take an interest in Bitcoin and see how Bitcoin could actually help them achieve some of the things they were interested in. I think these could be potentially powerful allies. And last, since I have all your attention here, I'm just going to close with a personal plea, a couple of wish list items. So for the State of Bitcoin report, we rely on data to produce charts and show trends. And the Bitcoin community and a number of companies, of course, value their privacy. But we think that greater transparency and more data actually is not only good for Bitcoin, but we think it will be good for these companies as well. I've reached out to ATM providers, for example, and they're very reluctant to want to share use patterns and how much their ATMs are being used. But think about how good it would be to show that kind of nice hockey stick for ATM use or ATM deployments worldwide. And if you're concerned about, say, sharing your company's personal data, do it in an anonymous way, like when Accenture comes in with a sector of the economy and they aggregate up industry-wide data while keeping individual company data confidential, so they can show how the industry is performing, and then we all can know how Bitcoin's performing as well. So I do want to encourage you to be more open with your data. be more transparent. I think initiatives like what we saw with the exchanges after Mt. Gox coming together and talking about how they were going to make some reforms, those are very positive, and let's keep sharing the data with me. All right, thank you.